Hello, everyone. This is Abhay Agarwal from Piper Serica. The month of July has just ended, and it was quite an eventful month for global stock markets and also for Indian stock markets, especially due to the earnings season that we are in, and also because of the constant news flow about the tariff and geopolitical situations. So, it would be an opportune time for me to just reflect on the month and talk a little bit about what we are doing while managing your money, and also where we think that the markets are headed and where do the opportunities for us lie. In terms of the portfolio performance, last month we were up just about 1% in absolute terms, which was quite encouraging compared to Nifty, which is our benchmark, which was down 3%. And then we had the mid and small cap indices, which were down 4 to 5%. So the portfolio did well last month and continues to do well. We are continuously increasing the alpha over our benchmark, and we think we will continue to do that. And you will see that in the monthly portfolio statements that you will receive shortly. A large part of our outperformance came from the segment that we have been very bullish about, which is the whole EMS segment and our investments in companies like Kaynes, Syrma, Amber. They all did well based on the results, quarterly results. The quarterly results were either slightly better or in line with our expectation. And I think the market is rewarding them for the clear and present growth opportunities that these companies bring. It's a unique segment. That's what we keep saying. Uh, what the IT services business did for investors 20 years ago, the EMS sector is doing the same. It has a lot of support from the government, from the market, from investors. And we believe that this outperformance by the whole EMS sector will continue. So we are quite excited about having these companies in our portfolio, and we are researching a few more that we may add to the portfolio. You will see that change in the next model portfolio change. The other sector that did well for us, and we don't often talk about it, is the whole agrochemical sector. And we have two companies there, Sharda Chem and Dhanuka, both hit their all-time highs, backed by very good results and expectations. Uh, and that also tells that it's not only the exciting stories, the flavor of the month stories that do well. You have some of these companies which are very traditional, but run by founders, run by managers, promoters who are very focused on creating profitable growth, are very good users of capital effectively to grow the business, run very tight operations, and then it's a matter of time that they get rewarded by the market. So I think the good thing is that our portfolio has a very good mix of high growth opportunities and some steady growth names, which are all doing well. The segment that did not do well for us was the recent bets that we have made in banking and financial services. But we believe that it is early for this sector to start showing performance. I think the market would still like to see a quarter where the numbers have decisively turned for the better. And I think that should happen in the current quarter, the quarter we are in. So we are expecting this whole segment to start outperforming from next quarter itself. So in terms of worries, none in the portfolio. We are not looking at exiting any of our positions. There are some stocks that have gone higher than model portfolio allocation because they have done well. So if we add any new company, we would probably trim some of these over allocations and use that money to add new portfolio names. So all in all, the portfolio is doing well. In terms of the markets itself, there is a lot of pressure on the markets, and that is coming from this constant flip-flop on the FTA agreements with the US. And I don't think, and we never believed that it would be an easy journey where a quick decision will be made between the US and India. I think it's going to be a 3 to 6 month negotiation where both sides, especially the US, will use all its might to put pressure on India to agree to some of its terms. I don't think India will agree easily, so we can expect protracted negotiations, which will finally culminate. However, it is not going to be easy, and the markets will keep feeling the pressure of constant threats of new and higher tariffs on India by the US president. So, we expect the global markets to continue to be volatile because of this news, which is, changing every day and is not consistent, and which will keep investors on the edge. The good thing is that these are the kind of markets where you get a good opportunity to invest in the stocks that you really believe in for the long run. In terms of our focus, we have started our research, as we always do, doing on ground channel checks with retailers, distributors, to get a sense of what are the consumers spending their money on. This is the time where the festive season stocking starts, and this is a time when large companies across segments like paint, polish, tiles, plywood, home improvement, autos, they start getting a sense from their distributor about what is the expectation of demand in the festive season. If you remember, the last festive season was pretty poor. This time, there is a lot of caution that we can sense. So, if the festive season is actually better, the demand is actually better than what it is expected to be, we can see a catch up rally in the market soon thereafter and the improvement in earnings. So we have started our work. We are going and talking to distributors, retailers, stockists across product categories to get a sense of what they are seeing. And then we will share our findings with you in the next broadcast that we do. So to summarize, I think where we are in India continues to be a growth hotspot. We are seeing very robust demand across all categories. There are months when the demand reduces mildly, but if you look at the government tax collections on the GST front, they are trending only one way, which clearly shows that the consumption is not holding back. And this consumption will continue to increase. Our recent meetings with foreign investors show a lot of interest in foreign investors to come to India, to look at India as a next 10-year growth story to make money from. So we will continue to do whatever we can through our on-ground research, through our engagement with management of companies to find long-term investment opportunities that make money for our investors irrespective of where the market goes. So thank you very much for your time, and I'll come back to you probably next month again with an update.